Fortinet has been one of my favorite cybersecurity companies for a couple of years now. I've had the stock rated as a buy, and I've been following the company for several years. The cybersecurity industry is one of my favorite industries. I like the growth prospects. I like the differentiation between companies. I like the state of competition. There's a lot of things I like about the cybersecurity industry. So I'm going to revisit Fortinet now. It's been a couple of months since I shared a video on Fortinet, and I wanted to give you an update. I'm going to look at the company's major risks, and then I'm going to share with you the valuation on a forward price to earnings and a discounted cash flow basis using my proprietary discounted cash flow model. And I'll also update the company's return on investor capital, and I'll bring it all together and update my buy recommendation on Fortinet stock and let you know if I still like the stock at the current valuation. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so the first risk I'm going to highlight is product vulnerabilities and exploitation risks. So recently, a zero-day vulnerability in one of its firewalls was reported, and that allowed unauthenticated remote code execution. So any of these types of situations is a double negative for a cybersecurity company, right? So if your cybersecurity is getting attacked, that raises the question of the value of your product. Many other companies, they can face cybersecurity attacks, but it wouldn't put under question the value of the company's products, right? Like, for example, if Walmart was to face a cybersecurity event and some data was hacked or something like that, customers wouldn't value the value of Walmart's products. Maybe they would, instead of using a credit card, maybe they would use cash if they felt like their credit card data was at risk. But they wouldn't say, well, Walmart, why should I even shop at your store? Your products are not valuable. That's what would happen for Fortinet if they experience these events and it becomes more common is their customers are going to Fortinet for cybersecurity. And if Fortinet themselves is experiencing and can't protect itself from cybersecurity attacks and other types of attacks, then it raises its question of how valuable they can be to a customer in protecting a customer if they can't even protect themselves. So another risk I'm going to highlight is development lifecycle risk, right? Just because they developed a good cybersecurity product or several cybersecurity products in the past doesn't mean they're going to be able to continue doing so. But it does give you a reasonable expectation that they can. When they've demonstrated several years of developing and updating their products to compete with what's available in the market, as an investor, you can start to feel reasonably confident in the company's ability to develop products. You can't be certain, right? And that's always a risk. Especially with Fortinet, they haven't been around for a very, very long time, right? The leadership hasn't been there for a very, very long time. A few years isn't enough to feel 100% confident in a business's ability to continue developing new products that stay competitive because the industry is moving forward. All of its rivals are investing in new products and updates to existing products. And if Fortinet cannot keep up with that cycle of advancement, they're going to be left behind and everyone else is going to move forward. And that's a risk for Fortinet stock investors. The last risk I'll highlight, and I would say it's kind of related to the first risk, is the reputational and legal risks from security incidents. So exploitation of Fortinet products by threat actors can erode customer confidence and attract regulatory scrutiny. And I think the bigger risk there in that statement is erode customer confidence. That customer confidence is the reason customers go to Fortinet because it's not a product like a cup or a wallet where a customer can see it, touch it, experience it, and know that it's going to do what it promises to do. And so they can feel confident that they're getting their money's worth when spending on this product. This is a product that the company probably doesn't have very strong know-how in, especially if it's a relatively smaller company. And so a lot of it is based on trust. A lot of it is based on the consumer trusting that Fortinet will deliver the thing it's saying it will deliver. And if Fortinet is having these kinds of incidents that are eroding that confidence, that can be a big deal for Fortinet in reducing the amount of orders it can sign, reducing the amount of customers it can re-sign, and slowly reducing the company's revenue and shrinking the company's profits. So now that I talked about the company's risks, I wanted to share with you my proprietary discounted cash flow valuation of Fortinet stock. Now, here I'm just going to focus on the outcome of my calculation. If you want detailed step-by-step breakdowns of these discounted cash flow models, I have dozens and dozens of member-exclusive videos where you can see just that. At less than $5 a month, you can join my channel and see all those videos. I think it's a great deal. Now, in terms of Fortinet's intrinsic value, the fair value of this business, I feel, is around $95 a share. Now, the current market price is $107 a share. And I would say this business is fairly valued to being slightly overvalued, right? This isn't enough of a difference for me to go out on a limb and say that I think the business is overvalued. I don't have that much conviction in the accuracy of the output of this financial model, right? I don't have that kind of conviction on that. So I like to provide a margin of safety. And the margin of safety here is about 10%. So I would say $11. And so it's right about touching with the intrinsic value per share if I were to drop it from the current market price, a 10% margin of safety. And Fortinet is a really good business. I would say close to being an excellent business given its time in the market. During the time in its market, it's delivered really great results. I would say the one of the only reasons I wouldn't say it's an excellent business is because of the lack of extended history in doing excellently in what it does, right? The businesses I rate in the excellent category are companies that have done this at this level for more than a decade, closer to 2 decades at the minimum. And Fortinet doesn't have that kind of history in order to earn that excellent business rating as I define it. But in its time, it's done great. And one of the evidences of that performance is the return on investor capital, which has improved dramatically in the last decade, jumping to 23.9%, up from 1.2%. So not only is the ROIC number of 24% a really good number, but the trend line is improving meaningfully, and that's also a very good number. So I like both signs from Fortinet. And then when I measure the business on a forward price to earnings ratio, 44.44, I would say is fairly valued for a business with this level of execution, with this level of profitability and growth in profitability, operating in a very attractive industry. I would say that's a fair valuation for that kind of a business. So overall, I feel that Fortinet is a very good business trading at a fair valuation. And given the other qualitative factors are working in its favor, I'm still rating Fortinet stock as a buy at current prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.